Back with us here on Chartbusters, shifting focus to Zomato now. The board is going to meet on the 22nd and to mull a fundraising via QIP. Nimesh has picked up some exclusive details around this. Nimesh, tell us more.
Well, Amos, this is what I've picked up. That, as you rightly pointed out, there's a board meeting on 22nd to consider a fundraising via QIP. What I understand is the company is likely to raise close to 8,500 crores, which is $1 billion, is what Zomato board might approve the fundraising via QIP. Now, there is a technical reason why this is going to be significant for Zomato. The reason is very simple. If you look at the shareholding pattern, the FII plus FDI holding in Zomato is over 50%, and the domestic is less than 50%. After this fundraising, my sense is that the domestic holding will go up and the combined FDI and FI holding will fall below 50%. And after that happens, once the fundraising is done, I understand the company is likely to write to RBI to cap the FI holding at 49%. Now, this will have a very significant impact on the not only on the structure in terms of FDI and domestic and FI holding, but this will also mean ease of business as far as the e-comm business of Zomato is concerned. So that's the reason why this is what I've picked up, that the fundraising will be close to $1 billion, 8,500 crores. And this will be essentially done to reduce the FI holding below 50%. We've written to Zomato for an official comment. We're waiting for a response from them.
All right, Nimesh, exclusive details there coming in from Zomato, the board meeting that is coming in now on the 22nd. Shireen Bhan is also joining us on the show for this. Shireen, is a significant board meeting lined up for Zomato?
Yes, it seems that way, and I think as Nimesh has just broken, this was something that we were all wondering about. Given the cash that Zomato is already sitting on, what was the reason behind this fundraise? And I think Nimesh's story makes eminent sense because, given the aspirations that Zomato has now to take Blinkit forward and really grow Blinkit, the FDI restrictions will be a constraint and will be a spoiler. So with this QIP announcement coming in and the possibility of Zomato actually being able to lower its FDI holding, that would then open up a room for Zomato to be able to grow Blinkit without the added restrictions that the FDI policy on e-commerce puts in. So I would imagine that this now starts to make sense. And what I am also given to understand from my sources is that this is something that has been on the cards. There have been representations made to the government about this because remember, Zomato has Indian founders. It's headquartered here in India, but at the end of the day, the government cannot be guided by anything else but the FDI shareholding. So I think it is prudent that this is a decision or this is a consideration for Zomato at this point in time, given the fact that it is really looking at building out Blinkit, which is the reason why we've actually seen this kind of bump up as far as Zomato's valuation is concerned. So this now starts to make eminent sense, and I'm wondering if we have reactions there with guests on the possibility of
we do have Anil Talreja. We do have Anil Talreja, the partner at Deloitte India, and Moin Ladha of Khaitan and Company, who are joining us to discuss this further. Gentlemen, good morning. Thank you so much for joining in. Mr. Talreja, the first question I would like to ask you is this fundraise that Zomato is planning to do now, is to this e-commerce policy. What does that help now with this, if that does take place? How does that ease things up for Zomato going forward?
Well, from a sector point of view, I think the challenge always was the FDI restrictions, as rightly mentioned by Shireen. I think what is important is there is some amount of clarity insofar as the regulations are concerned. I think that's one thing which is behind our back, because that was also a concern. Multi-brand, single brand, I think what can do, who can do, all that is sorted. And I think the sector overall has been growing pretty well. So if you look at FY23, our e-commerce sector was actually valued at almost $80 billion. So there's been an increased amount of growth. Finally, I think what is also important is ultimately everything is for the purposes of the consumer. Now, consumer spending has increased, and we've noticed that it has significantly gone up even after the revenge buying post-COVID. So if there is going to be a huge amount of demand from the consumers, then I think the companies will certainly have to follow the regulations, but they will also have enough potential to grow given that there is, a continuous ask. And it's not necessarily the larger cities. It is also the tier 2, tier 3 cities, which I think one has to focus on.
Yeah, you're absolutely right, Mr. Talreja, in pointing that out. And we also bring in Moin Ladha into the conversation. Mr. Ladha, many thanks for joining us. As I pointed out yesterday when the announcement was made to the stock exchanges about Zomato's QIP, we were wondering as to why they would need funds at this point in time, given the cash that they're already sitting on. But what my colleague Nimesh is now picking up, and it does, as I pointed out, make sense, is for Zomato to be able to unshackle itself from the restrictions on account of the FDI policy for e-commerce, especially as it goes out there and builds on its Blinkit ambitions. How do you see the possibility of this move and the logic and rationale behind it?
I think, Shrin, there are two separate regimes by which foreign investment is permitted. And I'm not sure if your question is directed to the fact that FIIs or FPIs would now be investing. And that's the reason for this fundraise. Is that what your question relates to?
No, my question relates to the fact that under the FDI policy governing e-commerce, there are restrictions on group entities and how much they can transact with each other. There are restrictions on, for instance, only operating as a marketplace and not as an inventory model, etc. So from that perspective, do you believe that it will allow a greater degree of freedom for Zomato Blinkit to operate as it grows its footprint?
Yeah, I mean, honestly, the restrictions are very clearly diverted towards the fact that one should not be able to facilitate a multi-brand retail or single-brand retail, as Mr. Talreja also mentioned, through this structure. Only a model, which is a marketplace model, is something that's permitted really. So, I mean, those restrictions continue to apply. And those need to be, honored by anyone who's using a similar structure. Portfolio investment, on the other hand, is a separate regime, and you have an additional limit through which portfolio investors can really invest, which then gets capped at the FDI limit unless you've reduced it otherwise.
That's right, and this was a consideration, if I remember correctly, even as far as Zomato's IPO was concerned. But from an industry perspective, and we've really seen this big quick commerce boom, Mr. Talreja, let me start by asking you, in the past year and a half, in fact, now consideration on the part of the government to say, look, how do we slow this down? Can we slow this down? What is the impact as far as modern trade is concerned? Of course, we've just heard from Zepto unofficially that they're looking at additional fundraise, in addition to the funds that they already raised. But it, of course, requires immense amount of cash. But from a regulatory standpoint, perhaps bringing the FDI holding in Zomato under 50% would provide a greater degree of flexibility?
Well, Shireen, I think the way I look at it is there is significant amount of clarity which today is there. So there's no confusion in terms of what should be the percentage stake. But I think what is the driver for all of this? The driver appears to be largely the growth aspiration of the companies. And the growth aspiration typically comes as to what is the feel in the market. When we are seeing companies prosper, that's where they're deriving their valuations from. That's where they're deriving their investors from. And whether it is, single multi-brand inventory-based, the market-based model, or it could be even manufacturing. I think it all depends on what is the model, the financial and the business model that the company adopts. So just to give you an example, if you look at a company that is completely catering to quick commerce, as you said, which is a 10-minute delivery or a 5-minute delivery at the doorstep of the household, and has the potential and the capacity to meet that promise and doesn't do things wrong, I think then there is enough potential for this company to grow. And the funding, the shareholding pattern, the source of the funding simply then follows. That's how I have seen in many conversations I've had with companies in the quick commerce space.
Shireen, if I can ask you, with regards to Zomato, as even the guest pointed out about the shareholding pattern, the Chinese ownership has also come down considerably in Zomato. The last holding I was checking, Ant Financial owns only just 2% stake in Zomato now. They were owning more than 10% at one point in time. Will that also mean that the scrutiny on Zomato comes down from a regulatory point stand?
You know, while it has been a concern and a consideration, I think across the board, all of the startups that did have significant amount of Chinese holding, including Paytm, etc., have consistently over the last years been trying to bring that down. So I'm not sure whether that is a likely factor, or a significant factor in this decision. But one will have to see. But I want to go back to Moin, and Moin, just to sort of again build out the case for this. For instance, I am given to understand, like many other. Blinkit also has aspirations as far as private label and so on and so forth is concerned. So, just from a business model point of view and from the ability to be able to make choices to build out the ecosystem, so to speak, how do you see this move?
Your holding to a certain percentage also is driven by various other factors in terms of how what's the real intent of growth, what's the real intent of keeping the restrictions at bay, and it's maybe not only driven by FDI restrictions. Maybe there are other plans. I mean, I've seen more than one company who wanted to ensure that the control doesn't pass on to the FPIs, and they want to limit at least that control because there is another aspect. The moment you cross that control to foreign investors, then any downstream transactions you do or any future growth transactions you do, that also is subject to the same restrictions of foreign direct investment. On the other hand, if you're Indian owned and controlled, then whatever downstream transactions you do, which is like when you're buying any subsidiaries or other businesses under you, that's not subject to the FDI restrictions. So really, this limit gives flexibility to a company to be able to then explore sectors which may have greater, FDI restrictions or FDI regulations, because then you're treated as if you're doing investment as an Indian. The moment you pass the control to foreign investors, that flexibility goes away. Maybe that's possibly one of the intent, really.
Is an important aspect that you bring to the table. One will, of course, have to see, how this pans out. And, of course, this is source-based information that Nimesh is picking up at this point in time. I would imagine that we will have more details once the decision is taken and we hear from the company. The company, of course, is in a silent period at this point in time with their results awaited. And so we have not heard back from Zomato to the CNBC-TV18 query just yet. Many thanks, Mr. Talreja and Moin, for joining us here today. Appreciate your time. And, of course, we will check back in with you as we have more clarity on the way forward.
All right. Thanks a lot for joining in and taking us through that conversation. So Zomato will be the stock that we'll be tracking for the next few sessions as well till we get some confirmation on that front. Well, as